Thank you so much for your time on the show, Mr. Fakayejo. Let's first start with how we're seeing the market perform so far this month.
From every indication and the various indices, it's quite apparent that the performance of the market this month is, I would say, not surprising, but very negative. Not surprising in the sense that virtually all the securities that declared dividend at marked down, and also the market has assimilated the Q1 reports of most of the companies. So there's really nothing that is going to stimulate the market or stimulate demand for stocks at this point in time. So the market is like blank in terms of information, and at the same time, there is no other stimulant as such. So what we are seeing exactly is a situation whereby investors are just maintaining a sit-and-look approach. And secondly, another reason why we have seen the position that it is the uncertainty surrounding the MPC meeting, which is presently holding, and the outcome will be broadcast to the nation tomorrow. So that such uncertainty has affected the banking sector stocks more, and until maybe they come out with what they have to do. Because before the inflation figures were released, it was being expected that it's going to go higher, but with a marginal drop in the inflation figures. So everybody now is in a limbo of whatever may be the outcome of MPC meeting tomorrow, whether they will tamper with rates or not. So investors are actually maintaining a sit-and-wait approach.
All right, sit-and-wait approach, you say there because of the MPC. But I'd still like to get into the markets a little and I know what's playing out here. I'm looking at one of the outliers here, sector being the NGX Oil and Gas Index. We're seeing that despite the fact that the market is down about 4% year to date, we're still seeing that sector fly quite high. We're seeing month to date, it's up about 19%, and we're also seeing that it's up 35% year to date. Why is the oil and gas index such an outlier so far?
Well, I think, to be candid, that sector has been the sector that has been the, I would say, most laggard, that has lagged the most in the entire sectors in the market. So if we are seeing a slight improvement now, I think it's something that the market has been long waiting for. So it may not be anything surprising, but when we look at it substantially, with that improvement is still nothing to compare when you put it vis-a-vis other sectors.
All right, when you look at vis-a-vis other sectors, you say, but I'm still looking at what else to expect in the market going forward. You say yes, the MPC people are having a sit-and-wait approach. We're looking at inflation figures, beginning to moderate, albeit marginally. But what do you make of the GDP figures that were released?
Well, I think ordinarily we would have expected a much better performance. By 0.51 or 55%, well, it's still acceptable. But I think maybe with what has been put in and the expectation of investors, I think that is still low. And I believe strongly that the subsequent reports may bring us something better. But owing to the inflation, to the insecurity within the system, I think what we have, the GDP report can still be pardoned.
All right, but let's get into another story that impacts the capital market. Here, we're seeing the Securities and Exchange Commission adopting the sustainable finance guidelines for capital market operators. What do you make about this news item?
Well, I don't really see anything new because most of the if you look deep into the SDGs, Sustainable Development Goals, globally and even for the country, I think this is just an extract that applies directly to the financial services sector. And I think it's nothing new. But I believe if they are giving it a new focus and a strategic approach, I believe it's something that will actually enhance the market and give it a sustainable trend over time.
Because Mr. Fakayejo, when you look at it, part of what they're trying to also achieve here is better corporate governance for especially the listed corporates there. We've seen that play recently when you look at what played out in the banking space with some names there. But I'd like you to speak to how we can foster that environment where we're seeing better outcomes in regards to corporate governance.
Well, I believe with respect to the regulator maintaining good corporate governance among the listed entities, I think it goes beyond just churning out principles or policies. I think the oversight function of the regulator is not sufficient. And I believe that Securities and Exchange Commission can do much more than they are doing. They only come when when the situation is already bad. I think there's so much they can still do to nip whatever has to be done. There's still so much they can do to nip it in the bud. We've seen the case of Wando, which was very embarrassing to the economy and to the capital market. Likewise, what we are seeing in the case of what we saw in Skybank also, and also what we are seeing in First FBN Holdings. And I think the oversight function and responsibility of the Securities of an Exchange Commission has to be stepped up, and there is no gainsaying about that.